Hi, it's Dwyer, gamblersadvisory.com, a free site, money1776.com, a free site. Today is Wednesday, September 7th, 2022. Remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. Now, yesterday, we had rolling blackouts in parts of Silicon Valley, Northern California. My area was hit. The power was out here for something like 4.5 to 5 hours. Right? Palo Alto was hit. You had rolling blackouts in Palo Alto. Understand, we have a full-fledged energy crisis. Before the blackouts started taking place, energy prices, electricity prices spiked here in Northern California, just like they're spiking right now in Europe. But yet, the spiking electricity prices weren't on the front page here. Let's just say the story is really subdued, even though the story is a major story. Even though the story is such that many people can't avoid the cost because their life is built around electrical appliances. Right? Having the ability to turn on a computer, turn on a TV, turn on the electrical appliances in your house, store your food in a refrigerator. Right? Understand, businesses, those entities that employ people, on the fly really can't change their business models to deal with energy prices that are jumping more than 20%. If you're running a restaurant, how do you stop refrigerating your food? How do you stop keeping the lights on in the business? So, just understand that where you have scarcity, where suddenly the supply of things, in this case electricity, drops such that the prices have spiked, such that the local utility starts to have rolling blackouts, you actually have investment opportunities. So, I'm in the XOP. We're talking about ETFs. If you don't know what an ETF is, then you need to research what these investment vehicles are before you even consider remotely the possibility of investing in them. Right? So I have some money in a couple of energy ETFs, right? The XOP and the XLE. Right? I want everyone to think for themselves. Please don't consider this to be investment advice. Rather, I'm just sharing with you the ideas I'm pursuing. Now, let me just point out that in The Wizard of Oz, great movie, we find out that the wizard has limited powers. That once the curtains drop, you realize that the wizard, and let's draw an analogy to the government, does not have sustainable special powers to cure long-term imbalances in supply and demand. Right? Whatever the wizard is doing, whatever promises the wizard is making to get your vote, at the end of the day, it comes down to long-term supply and demand. You want sustainable markets. So, let me just point out that we're in an interesting time because the information flow, the media, is no longer controlled. right? Understand, folks, legacy media isn't dying. It's already been replaced. You understand that there's been an agenda to limit the information that you receive, right? You're a consumer of information. You understand that, let's say in 2019 or 2020, things were being censored, right? We're now finding out from the censored groups themselves, outfits like Meta, for example, that certain stories they were encouraged to kill. Whether it's the risks of COVID vaccines, or whether it's the illegal activities of family members of presidential candidates, we're finding out that centralized legacy media didn't work because groups like, in the United States, the FBI would lean on the centralized legacy media outlet and would convince them not to talk about, right, the risks of mandatory vaccines. Right? We're finding out too that loans were given out and that the loans came with strings attached. Right? Just like here online, you understand that there are some people who were giving out good information on outfits like YouTube, for example, who then got blowback from YouTube, in some cases removed from YouTube. Well, let me just say this. As someone who's still on YouTube, right? Let me just say this. You understand that in this world, you can't rely on centralized news sources. That there is a lot of good news online from people who have the information and who are involved in the relevant market and who are providing that information to you. So you have something you didn't have before, and we'll call them the self-employed, because understand, people in corporations, let's say you're running a pension fund, have a fiduciary responsibility to pension beneficiaries, right? They have a responsibility to the people around them. They can't jump out of line and just suddenly start giving consumers relevant information without first getting the approval of the board of directors, right? Of the longtime players with more seniority at their corporation. So what you have now is something new, and it's shocking, right? It's very shocking. You have entrepreneurs like Robert Kiyosaki who have made a mint and who continue to make a mint in the real estate market. Understand, Robert's at the top of his company. He doesn't have to answer to some corporate structure, because the way his company is built, he's the person who put the structure in place. Right? He and his wife, Kim. Understand, people who have made a mint on real estate, who know more than 99.9% of the public about the real estate market. Right? Ken McElroy, for example. They're online here with no corporate media filter, telling you about the crashing housing market. Let's go one step further. Very successful realtors, in places like Florida, who run their own businesses, we'll call them the self-employed, are now making videos where they're walking through real estate markets with cameras. They're stopping in front of houses, and they are giving you the numbers from Zillow, from Redfin, from credible real estate sources, from their own experience. Some of these realtors are saying, last month I sold a house in this neighborhood with these specs, right? Bedrooms, bathrooms, square footage, lot size, at this price. And now, such houses are selling this percentage below the prices I used to sell houses for in this neighborhood. Right, folks? The information is relevant. The information is uncensored. If you're an investor, you need this information. It's unfiltered. Well, just understand the problem with unfiltered information is you truly find out that the wizard, the government, really has very little power. That short-term fixes, where I say, this energy market is crashing, let me do a stimulus, fiat currency boost to put more money in the pockets of consumers for the winter months. You understand that that's not going to cure long-term imbalances in supply and demand. You understand that that's unsustainable. All that's going to do is lead to inflation, an artificial jump in asset prices like Florida real estate, and increase inequality. When you have a jump in asset prices, the people with the assets have increased wealth at the expense of people who don't have the assets. So when the government is, by its actions, causing artificial jumps in asset prices and are using taxpayer money to do so, you have wealth transfers to the people with assets. Is that how you want money in the public treasury used? So let's sit back and see how all of this falls out. Because understand, these groups that are pressuring media outlets that until now have been corporate and have been centralized to quash stories, right? Hey, don't talk about the risks of that COVID vaccine. Hey, don't emphasize the fact that the vaccine doesn't prevent you from getting COVID. It just helps some. Let me repeat that, some, with the severity of their symptoms. Don't talk about that. Folks, because of technology, understand the censorship now is far less possible. Understand the information you're getting is unfiltered. As prices adjust, now that we're past or getting past the everything bubble, I believe we're going to find out that real estate in some areas is going to crash 50%. That real estate, as realtors know, is local. That when you have rising energy prices, some businesses are going to have to lay off workers because their cost structure has changed. Suddenly they're paying 20% more in energy costs, 50% more in energy costs. They're going to have to cut expenses someplace. That kiosk might be able to replace a waiter. That coffee brewing machine might be able to replace a barista. Rising energy costs are going to lead to more capital intensity. Businesses are going to become more capital intensive. You go to Vegas, before there used to be a crowd of people at the buffet. You would talk to people, they would tell you the price, you would then get a server, a hostess, a host, who would then seat you at your table. You had a waiter who would come by, fill your cups with drinks. You still have this at the Wynn, right? But let's just say at other places now, a lot of it's self-serve. You see kiosks. You can pay using a kiosk, right? You're supposed to get yourself orange juice, soda, milk, water, right? Understand that's rippling through the economy. So let me close by saying this. I understand that the United Kingdom now has a new Prime Minister, Liz Truss, and she is facing a full-blown energy crisis. Right? British people are watching their electricity bills skyrocket. Right? You understand that energy is scarce, in part because of all these sanctions that have been levied in response to Russia's invasion of the Ukraine. Right? They're world events that are impacting markets, including the energy market. Now, I don't say this lightly. I don't know Liz Truss. Maybe she's Phi Beta Kappa. Maybe she's a great analytical thinker who can come up with, simulation models and some solutions to the problems presented. Right? All of that could be possible. The question you have to ask yourself is, let's say Liz Truss decides to put more money in the pockets of the British people for this winter to help them pay for their higher energy bills. At what cost does that come with? How sustainable is that? Don't you have an increased awareness now from groups like the cryptocurrency community, right? From groups like bettors, we'll call them investors, who look at currency markets. Don't you have people out there in this increasingly uncensored world with more information who will realize that that's unsustainable? You've given me a stimulus check for this winter. How about next winter? When's the next time I can turn on my air conditioning without worrying about rolling blackouts? Isn't the problem here systemic? Limited energy supplies, demand outstripping the supply. Right? The need for the market to ration, that's the word we'll use, the limited energy. Right? Isn't the real solution the kind that even a Phi Beta Kappa can't solve? Isn't the real solution to take a step back and to say, I need to remove the barriers here between the suppliers and the consumers? I need to realize that the power to tax isn't enough here to solve the imbalance between supply and demand. Rather, what I have to do is to find a way to help lower transaction costs, to help make this market reach price points more seamlessly. Isn't the real solution to take an even deeper step back and to ask yourself, well, what can we do to, in general, incentivize suppliers to come up with even more supply. Right? Understand, what we're going to find out is a lot of what we've been told is simply inaccurate. Right? Green energy is a great idea. Maybe it's not ready right now to replace our current fossil fuel dependency. Maybe even a good person in the Prime Minister's office can't solve that problem. Maybe the solution is in allowing suppliers to build the infrastructure to deliver the energy needed to fulfill demand. With regard to the housing market, maybe the solution is for more self-employed realtors who have real-time experience in local markets to continue to pass that information along to consumers. So people buying a house are going to think to themselves, whoa, you know what? I saw a video of this realtor who has been successful, or I saw a video of Robert Kiyosaki, major real estate investor, discussing the market. And he's suggesting that the prices are dropping. Maybe I need to do research on historical price trends in real estate, and maybe I need to realize that we're coming out of a bubble. That bubble over the last 5 years, 10 years, 15 years, perhaps since the United States got off the gold standard, right? Maybe that period of time isn't representative of longer-term trends. Maybe I need to look at the work of Yale professor Robert Shiller before I buy homes. In fact, maybe I need to rethink buying homes until this market clears, which might take a year, which might take 3 years, which might take longer than that. In any event, that's how I see things, right? Just telling you what I believe. You need to think for yourself. I'm in the XOP ETF. I'm also in the XLE ETF. I believe there are no short-term fixes to the current energy problems. I believe we've been investing heavily in green energy, which quite frankly has less efficacy, less ability at delivering results today in terms of the technology we know versus fossil fuels. And of course, when you have limited investment dollars and you're allocating it toward green energy, you're going to have an underinvestment in fossil fuels, right? Don't get me wrong, I live in an area with a lot of Teslas, right? The idea of electric vehicles, hey, that's very appealing. Less pollution in the future. But I'll tell you what, if I'm driving to Southern California, right, and I'm in the middle of nowhere along Highway 5, I'm guessing that if I pull off the road, I'm much more likely to find a traditional gas station than I am an EV charging station. Right? Let's be real about our current needs. Let's not get seduced by smooth-sounding politicians who want workers at McDonald's to make $22 an hour, as is happening right now in my state, California. Right? Let's recognize that there's something called supply and demand, that sustainability actually comes from a frictionless meeting of the two. Right? Let's understand that actual costs matter. That censoring media stories doesn't change the content of the reality. Right? We're now entering an increasingly decentralized world. Right? Politicians who can say, hey, let me give you a stimulus check, aren't doing any favors for you long term in terms of coming up with sustainable solutions to supply and demand imbalances. I would argue that only markets can do that. Anyway, that's how I see it. Let me hear from you. I hope you leave your comments in the comment section of this YouTube video. Thanks for stopping by, and I hope you don't get hit with the kind of rolling blackouts that right now are rippling through Northern California. Thanks for stopping by.